Well, last night Joe Hockey delivered the Have a Go budget, and as you would have seen from the press today, the centrepiece is the concessions given to small business. And I'm going to go through each of those in turn because they're quite generous, but I wanted to clarify straight away what you need to be to qualify for these new concessions. And it's important to remember that you need to be a small business, and that is a person who's conducting a business rather than, say, owning a passive rental property, which wouldn't qualify. So you need to be in business, and your turnover needs to be less than $2 million per annum, and you have to aggregate your turnover with any other entities that you're connected with. So we'll be able to help you in determining whether you're eligible for these new small business concessions and meet the $2 million turnover. But it's important to remember it doesn't apply to merely just passive assets. There needs to be a business being undertaken. The first of the concessions is the one that's getting most of the headlines, and that is the immediate write-off of assets that have a cost of less than $20,000 acquired after last night, all the way through to 30 June 2017. This is amazingly generous, given that the limit is currently $1,000 and was only $6,000 for a period of time. This will be the game changer, I guess, for small business. And it's important to remember that it's a depreciation allowance, so you get to claim full depreciation on an asset under $20,000 of cost, and therefore you need to own the asset or buy it outright or hire purchase it. You can't get this benefit if you lease an asset, and it applies to new and used assets. So basically, as long as you meet the basic test of being a small business entity and you acquire an asset after today, we're able to claim $20,000 as an immediate deduction where that was the cost of the asset. If you buy an asset worth more than that, it's normal depreciation subject to the pooling system. So I think this is going to be a real boon for people looking to buy, basically iPads and IT type equipment where ideally it's under $20,000, and we've already had a number of calls already from clients who are willing, very keen to take advantage of this concession. The next concession I want to talk about is the reduction in company tax rate from 30% to 28.5%, again for companies that are carrying on a small business, i.e. turnover under $2 million, as I mentioned before. This applies from 1 July 2015 and basically will mean a 1.5% reduction in the tax rate, provided you meet the basic conditions of being a small business. So, it's somewhat generous, but nowhere near as generous as the $20,000 immediate write-off, but it's worth noting that if you can get under the $2 million turnover and you are a company, you will take advantage of this new lower tax rate, which is being lauded as the lowest company tax rate in recent history in Australia. The next concession that applies to small business entities that are not companies is, and it appeared quite generous when you first heard it last night, was a 5% discount on your tax bill from 1 July 2015. And in essence, it sounded very generous, but it's actually limited to $1,000. So in essence, to be a non-company individual, basically in a small business, your turnover has to be less than $2 million. It's a 5% reduction in your tax, but it's only capped at $1,000. So that will be delivered to you by way of an offset when we do your next tax return. But it is only $1,000, and that's easy to miss in all the headlines. You think a 5% reduction is quite generous, but it is capped to $1,000, so we just need to keep that in mind. From 1 July 2016, a small business entity, as I've already discussed, a turnover of less than $2 million, is able to change legal structure and obtains capital gains tax rollover, i.e. there's no capital gains tax. And this is quite a big change, because normally there's only rollovers for changing from an individual or trust into a company. This rollover will work from, say, an individual transferring their business into a trust, which we've never had that type of rollover, but again, it's limited to small businesses, so you need to be very careful you qualify before you start moving legal structures. So we've got a year or two to look at the detail in this one, but we just need to be mindful that it only applies to those small business entities as defined. I'll now move on to the other concessions announced in the budget that they're not significantly limited to small business entities. And the first one that applies from 1 July 2016 is the immediate write-off of professional, being accounting and legal costs incurred by a business when they establish their business structure. In other words, they're commencing their business. Historically, they've been written off over 5 years. From 1 July 2016, we're allowed to write those off immediately. We'll need to see the detail and how that's defined, but that would ordinarily include legal and accounting costs and the entity formation costs that we'll be able to write off immediately when a business is commenced. A small change that hasn't got a lot of press is the change to the way motor vehicle deductions will be able to be claimed. In that we've traditionally had 4 methods. The government is simplifying that to remove 2 of them. They're removing the 1/3 of the cost method and 12% of the cost of the car method, as not many people are using those. And now we'll be have 2 methods to claim our motor vehicle costs. The first one is a flat cents per kilometre, and that will be at 66 cents. So one rate, no matter what kind of vehicle you have, 66 cents per kilometre, up to a maximum of 5,000 business kilometres. The alternative method is the logbook method. So where you're travelling a lot of kilometres, you'll need to keep a logbook to claim your motor vehicle deductions. And if you're travelling less than maybe 5,000 business kilometres, you can use the 66 cents set rate per kilometre method. And there's no other choice after these other methods have been removed from last night. Another change announced last night was a further improvement in the employee share scheme rules, and we have a number of private clients who have implemented employee share schemes, and the rules now that will apply from 1 July 15 are particularly appealing now. They haven't been for many years, maybe 6 or 7 years. So if you're interested in talking about how you might be able to implement one of those employee share schemes for your business, please give us a call. But the improvements last night even make them more attractive for business to implement if that suits your goals. Unfortunately, there was no change last night to the tax rates that we pay as individuals, and I'm just reminding everybody that the top tax rate of 49%, including 2% Medicare levy, will apply now all the way out to 30 June 2017. It remains to be seen whether that temporary deficit levy charge that we're paying out until 2017 of 2% will be removed and will return back to 47, but I have a feeling that we may be seeing that type of rate apply as the top tax rate beyond 2017, but there's been no reduction in individual tax rates last night. We were probably expecting a whole lot more reform in the budget last night, particularly regarding superannuation, and there was nothing really of any great note, so it's important to just remember that there's more reform coming, and the white paper was released some weeks ago, and there's a lot of things that the government are thinking of doing regarding superannuation. They're currently consulting, and we'll have more to say when the details of those emerge. But we were really worried that there were going to be significant changes last night to both superannuation and maybe capital gains tax. None of that eventuated, so we'll be keeping you in touch as we know more of these future reform and what it means for you.